Good morning, guys, and welcome to the Camp Financial Stock Market Update. Today is June the 2nd, so we're going to go over um, our four different trading um, styles, performance over the last month, as well as year to date, compare them to the S&P 500, as well as talk about a couple recent trades we've made. Not a lot. Didn't have a lot going on in June or in May. Didn't kind of trying to build up our cash position in the portfolio just so that we have adequate cash on hand if there is a market pullback. That way we can really look to start to get into more stocks and find good values. So at least the one system is to find good values. The other ones will be looking for stocks that start trending and that sort of thing. So like I said, mostly recently just trying to put some money on the sidelines so that we can react when we need to. So with that, we'll talk about recent trades. So the most recent trade came May 26th. We re-entered stock symbol CODI. It's Compass Diversified. They're called, you'd call them a conglomerate, and what they do is they own pieces, parts, whole parts of some other small companies. They're kind of a venture capitalist type of company, where they're buying, if you're familiar with Fox Brands, I'm blanking, the dirt bikes. If you're familiar with Fox Brands, things you'd see, again, like dirt bikes, four-wheelers, this sort of thing, then you'd be familiar with at least one of the companies that they have in their portfolio. So we took a long position in Compass Diversified at $16.15 a share on May 26th, and it's up very little, but it's up, I think, to 16.30, 16.45, something like that, since we initiated the position. And yeah, it's at 16.30, and usually right there around $16, it kind of finds a bottom. So at times it'll drop below, but 16 is a good support line. If it holds, odds are pretty good that it's going to go up from here. And we bought this one in our system where our goal is to get make 10% and take the initial investment off the table. So we've already done that twice with Compass Diversified. So we've got already have twice where the gains are still there, just continuing to compound, continue to get the dividend. That's one of the big plays with Compass Diversified. I don't like the dividend percentage per se. It's kind of high. It's almost 9% dividend yield, but they've been able to pay it consistently. I've been in this stock since May of 2014 with my original position, and just been letting that continue to run. So as long as it keeps paying a nice healthy dividend, we'll definitely continue to own it in that system until either they get bought out or something. But so we made that trade in May, and that's in, again, our 10% gain portfolio. I call it the Quanta Funda Techna. Basically, it's quantitative, fundamental, and technicals. I compare the companies to all other companies that are within their same um, industry sector, and then pull the one that I feel is in the best position uh, to rebound or take off from there. So far this year in that system, we are up 16.62%. So it's been a real strong performer this year versus the S&P at 8.54%. So no complaints. The month of May was it lagged the S&P in the month of May, and that's fine. Really, a lot of the reason why it's outperformed is the last two trades that we took in February in this system, and one of them hit, and actually even going back to December, the December trade in April hit its 10% gain, so we took profits. That was in AAON and PKBK, Park Bancorp. It hit its 10% gain in April as well. So we took profits in that in April, and then the other stock, CRWS, Crown Crafts, they make like baby cribs and that sort of stuff. We actually bought it on February 16th, and it hit 10% before the end of February. So we took profits in that in the same month. So within basically 10 days, hit a 10% gain and got out of the way. So that's why that system has outperformed the market so handily this year. We'll take a look at the technical system. So this one is based on buying stocks that look like they're ready to break out. Over the full span that we've been using this system, it's outperformed the S&P by just a little bit. So far this year, though, it's been lagging the S&P in every month. June, obviously we're one day in. It's done well. It's ahead of the S&P finally, but for the full year, it's underperformed. It's actually down 2.16% versus the market. Again, up 8.54. Part of that also that you got to keep in mind is like I said, we've been trying to get cash on the side. So we have not made a purchase in that system since October 14th of 2016. So, we haven't traded in that. Just the few stocks that are in it, we've continued to hold and let them go. See where they're going to go from here. Now we'll look at the value system, which has just performed outstanding. It's up 16.92% this year. It's very limited. I mean, there's only a few stocks in it, and this is one. So we actually did make a trade in this on June 1st, yesterday, and what that trade was is because the position size of one of the stocks in that portfolio has just continued to grow and grow and grow. I mean, it's way outperformed everything else in our portfolio. It's gotten a little outsized, so it got a little too big, which, depending on who you talk to, people will say, well, you should let your winners run. Well, yeah, but I also feel like I should probably, when I've got good strong profits, I probably need to take some off the table. So we traded out about Well, we traded about $500 out of it, so it was outsized in our portfolio by about $500. Um, so we traded out of it, traded that portion out. We're letting the rest still run. I mean, there's still $3,000 in there, um, and we're just continuing to tighten the stop loss on all the profitable trades, letting them, continue to work, but putting the stop loss in a position so that if for some reason the market would tank and turn around, or even just the market in that stock, that particular stock tanks and turns around, then we'll be able to get out of it without panicking. So, and we'll still get out with a profit on the rest of it too. I mean, there's with the way that stock's run in the last year, it's just been phenomenal. So now for our most recent system, and we've only been trading it since February 23rd, and on that one we're doing I call it an arbitrage system. We're buying a stock that it's been announced that it's going to be purchased, and we're buying it below the purchase price with a tight stop loss on the bottom end, so basically what we did is we bought Monsanto. It's been bear, it's been talking about buying, and there's a bid in at like $129. So we bought into this stock at 112.50, 112.55. And what we've done is, again, I just put a tight stop loss on it. So 112.55 to 129, you're talking about making $17, or about a 14-15% gain. And what I've done is I've just set it up so that there's a stop loss in place, so that if it turns against me, we'll get out. But odds are pretty good it's not going to drop that far, because again, the bid's already out there for it. So this trade is up 4.67% since, again, February 23rd to today, and the S&P's up 2.8%. So it's outperforming the S&P 500, and like I said, it's no trade is safe, or it's a fairly safe trade. No trade's guaranteed, but odds are pretty good that in this you're going to get out with a gain, with a profit, as long as the deal goes through. And if the deal doesn't go through, we're in a stock that's got a big name in the industry, and may continue to rise anyways. So with that kind of covers everything so far. So like I said, it gives us the year to date. The arbitrage system will give you the month of June or May as well. So for the month, the arbitrage was below the S&P. The Quanta Fund Tecna was below the S&P. Undervalued portfolio was a little more than double the S&P, and the technical system was over almost 3% behind the S&P. So rough month for that system, but again, no individual stocks moved enough that we needed to get out of any of them. We're just continuing to monitor, and we'll see where we need to go from here. So that's it. Take care, guys. If you have any questions, send me an email, chrism@campfinancial.net. I will answer questions here. I can send you a direct response if it's a personalized thing, but yeah, that works for me. We'd like to start throwing in some more user questions. So, all right, guys, take care.